The transaction that sells purchased inventory for resale not only adjusts the cash and the revenue, but also reduces inventory and offsets that with the cost of good. The process for selling purchased inventory is the same, whether it is a purchased crop inventory or a purchased livestock inventory. In our session today, we're going to be selling some purchased livestock. Before we begin the sale, we need to check a couple of things. So under your setup and accounts, we're going to look at the revenue account that we're going to use to sell the purchased inventory. So under resale of purchased livestock, we have sale of purchased feeders. We're going to want to make sure that the template is set to the default template of sell resale inventory. So we're going to look at our receipts and new receivables and select the account selected. And currently this one is set to DT increase revenue. That will not take our inventory, decrease the inventory. So we're going to change this template to DT sell resell inventory and save that. We could make the change at the time of the transaction too, but this will just make sure that you're using the right template all the time when you use the sale of purchased feeders or whichever account it is that you're going to be using. The other thing we want to make sure is to check what the inventory valuation method is assigned to our company. So we're going to go to Setup and Companies, select our company, and go to the additional detail. And under inventory valuation method, there are three options. FIFO is first in, first out. That means when you sell the inventory, it's going to look up the oldest purchase that is still not sold and use that cost per unit for reducing inventory and offsetting to the cost of good. If that purchase amount of quantity that's left is less than the total amount that is being sold, then it goes to the next oldest purchase and uses that cost per unit. So it's quite possible for your sale to have multiple journals that would be reducing inventory and offsetting with the cost of goods. LIFO is the other way around. LIFO would be using the last in, first out, meaning it would use the most recent purchase to use the cost per unit and adjust inventory and cost of good. And then as that one gets used, it would go back to the next most recent. And then the last one is average. Average would just take all of the quantities that have not been sold and combine the cost per units to come out with an average cost per unit to use when reducing the inventory and cost of good. So if you're going to make that change, you want to make that change before doing any of your sales. And it might be a question to ask your accountant of which would be the best one for your situation. Now we're going to go do our sale. You can either do the sale as a receipt, or if you haven't received the cash yet, but you want to enter the sale, you could do a customer invoice. Either one will do the same reduction of the inventory at the time of the transaction and increase that revenue account. So we're going to go ahead and select our bank account in our cash sale. And we're going to select where we want to sell this to. We have a Riverview livestock. And we're going to select a date that we want to enter this. And the amount that we're going to sell, we're just going to put in $10,000 here. And this will be a check. And now in our account is where we're going to select the revenue account for the sale of the resale inventory. So we have a sale of purchased feeders. And we're going to sell 15 head. And now we're going to go to our detail and fill out the rest of the detail. Notice that the detail button is red. That indicates we need to go to the detail because there are other pieces of information that are required before this can post. That would be the inventory selection. So we start with our amount that we entered for $10,000, 15 head. We can put in the number of pounds that the livestock are at right now at the time of the sale, and that's going to get recorded to the revenue account. But the inventory pounds are going to be reduced proportionately to the number of head sold and the pounds that they were at the time of the purchase. that would alleviate going into negative pounds in your inventory balance. It filled in our income account that we started with, and now we can select our inventory, which would be our purchased feeder cattle. If you want to look up what the balances currently are on that particular account, you can click your lookup button, and that shows our current balances. And we're going to be selecting one of these balances that we want to sell. So let's go ahead and select that we're going to be selling this 18 2S barn 40. All right, and that lets us pick our production detail now. We're going to have to pick that same detail so that the balance gets reduced properly. And that brought in our inventory adjustment. So it's going to adjust our inventory and offset with our cost of good with $5,250. It brought in our production year, series, and production center. And we can put in a notation if we want, and we're ready to click OK. Now if we look at our grid here, expand our journal, we see all of the different accounts that are going to be adjusted. $10,000 will be debited to cash and offset with our revenue of sale of purchased feeders. And our cost of good is going to be debited, increased for $5,250 and reducing inventory of $5,250. If that is all of the details that you need, we're ready to save that transaction. And now we can go run an income statement and see what that did on our income statement. Go up to reports and financial statements and an income statement, and we're going to run that just for the month of June and preview. And here we see our sale that was for $10,000 and our cost that came in for $5,250, leaving a net in this case of $4,750. And that would be on an accrual basis. And if we also want to see an activity to our inventory, we could do that under reports and transaction reports. Go to inventory, do inventory account activity, and we can select a date span there, and we've selected the account that we've used, a purchase feeder cattle, and go ahead and preview that. And in our preview, we can also turn on, under group, we'll go and group it by our production detail, and that'll give us a little clearer breakdown of what's going on. You'll see in just a second. I'm going to group it right under the account. And now we see all of our different production livestock details here. And we sold out of the 18 2S barn. So we took 15 head out at this point and the $5,250, leaving us the balance remaining from the 40 head that was begun prior to the beginning of the year. Those are some different reports you can run, and that is different things that you can do in managing your purchased inventory.